Uri Dadush is the director of the Carnegie Endowments of International Economics program. He focuses on trends on the global economy, and he says NAFTA has a mixed impact on the global economy, especially in Mexico.
I would say it's a very mixed picture. On the one hand, we've had a big export boom out of Mexico. On the other, there have been a lot of problems in Mexico. Mexico has not seen the growth that we anticipated. There have been a lot of issues with imports of cheap corn from the United States that have caused a lot of migration out of the rural communities in Mexico. Quite a bit of this has found its way into the United States. On the other hand, I think that the NAFTA has given a real impetus to the Mexican economy in terms of a significant manufacturing sector, just about the only one in the whole of Latin America.
Well, I mean, this was a big deal. This was about job creation. This was about doing business between Mexico and the rest of North America, the United States, and including Canada as well. We saw a lot of car companies establish factories there. We saw international car companies establish factories in Mexico. This was the big success point for Mexico. But we look at it after the first couple of years, and that investment died down. What happened? Why was that momentum stopped?
Well, part of it is that the international environment has become a lot more competitive.
Globalization.
Okay. Globalization. A lot of the manufacturing for a long time during the NAFTA period migrated over to Asia, in particular to China. More recently, however, China has lost some of that competitiveness, combination of wages and exchange rate appreciation. And of course, the U.S. economy is doing better, and that is being reflected in growth in Mexico.
Would Mexico had been better off had it not signed the free trade agreement?
No, I think overall this was an important and positive step for Mexico. And I believe there are more festivities about NAFTA in Mexico today than there are about the United States. It's understandable because for the United States, this is not as big a deal as it is for Mexico. But essentially what NAFTA is doing, it continues to do, is to build a more integrated North American economy. Canadian natural resources, relatively low wages and a rising middle class in Mexico, and the American powerhouse, which is a combination of technology, innovation, and ideas, etc. And that combination is very powerful and absolutely essential.
Let me take it a step further. There's this other Pacific alliance, trade alliance that they're working on building. Essentially all the Pacific Rim countries coming together. It includes many parts of South America, obviously including the West Coast, and then of course you go into Asia as well. How is that going to, I guess, complement the North American Free Trade Agreement, or how does it affect the agreement in itself?
Well, the Trans-Pacific Partnership, which includes some of the Pacific Alliance countries that you're referring to, is another big deal in terms of a regional integration arrangement that reaches across the Pacific. Canada and Mexico, let's not forget, are part of the Trans-Pacific Partnership agreements. So I don't see Canada and Mexico or the United States losing relative to its NAFTA partners. I see them as kind of all in one boat, liberalizing trade with the rest of the Pacific. Essentially a positive step in terms of making both parts of the Pacific Ocean more competitive and more open, which will help consumers.